a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about utilities, stocks, and ETFs. And utilities are very hot in 2024. Generally, these stocks do not get a lot of interest from investors, but the sector is best performing sector in the last 6 months, up about 22%. And even year to date, it is second best performing S&P 500 sector, just slightly behind communication services, much better than technology sector also. And if you look at some of the holdings in this sector, some of the constituents of this sector, Vistra is up 107% year to date. Constellation Energy is up 66%, and energy is up 50%, and these are among the top 10 S&P 500 stocks year to date. And earlier, this was seen as a defensive sector known mainly for its steady and high level of dividends. The sector is also seen as counter-cyclical, slightly like safe haven assets, because people use power, people use energy even when the economy isn't doing too well. So if you are worried about the potential slowdown in the economy, you can look at this sector because this traditionally performs well even when the economy slows down. Now, these tech giants reported their results recently in the past couple of weeks, and they reported massive investments in artificial intelligent intelligence infrastructure. And this boom in AI has driven a surge in demand for data center capacity to handle AI workloads and store the vast amounts of data that they require. And data centers in general are big energy consumers, and AI applications in particular, they consume even more energy than traditional computing. So that is why we expect a surge in demand for power by these data centers. And according to the Wall Street Journal, data centers could account for about 11% of US electricity demand by 2030. And according to McKinsey calculations, centers power need is expected to reach 35 gigawatts by 2030. So if the need for power grows like this, then we will obviously need more plants, more transmission lines, and other infrastructure. And it also means more returns for these energy companies. Now, the companies that we talked about earlier, which have done so well, they are benefiting more because of their focus on renewable energy, because these technology giants have pledged to use renewable energy to power their data centers, because driven by their sustainability goals. Now let's take a look at ETFs in this space. So the first one that I'm highlighting is the most popular product in the space. The ticker symbol is XLU by State Street. It follows a market cap weighted index, ultra cheap with an expense ratio of 9 basis points, and very popular with almost 17 billion in assets, 31 holdings. Let's go to the code page on Zacks.com. You can read our research report articles. Look at the dividend yields, much higher than the S&P 500 dividend yield. And then you can go, using the link, you can go to State Street webpage for this ETF. And you will see that NextEra is more than 14% of the portfolio. And you can look at the other holdings too: Southern Company, Duke Energy, and Constellation. These are the top holdings in the ETF. Now, more ETFs. So I'm not discussing each one of them separately because these are pretty similar. VPU by Vanguard, FUD by Fidelity, and IDU by iShares. They track pretty similar indexes. There are slight differences, which I've highlighted. VPU and FUD both are ultra cheap. They are more diversified than the State Street product with 66 and 68 holdings compared to about 30 for the State Street product. The iShares product is slightly more expensive with 40 basis points expense ratio, but all four of them, whichever you choose, will deliver pretty similar performances. The one which is slightly different is by Virtus Reeves. The ticker symbol is UTES, UTES. The difference is that this ETF is actively managed. And because of active management, this has been able to beat the market cap weighted indexes and ETFs. It is, in fact, the top performing product in the space year to date. Slightly smaller, 113 million in assets, quite small compared to those giants, and slightly more expensive too because of its active management. Now let's go to the code page for this ETF. I did a podcast with the manager, so you can listen to the podcast and learn more about this ETF. You can also use the link to go to Virtu's webpage for this ETF. Look at the portfolio and you will see why it has outperformed because of the focus on those top performing stocks. Now, on the last slide, I have the comparative performance of these ETFs versus the S&P 500 index. So the actively managed product UTES is up about 22%. The other products, the other four products, as I said, they track pretty similar indexes, so they are all up about 17% year to date, whereas the S&P 500 index is up about 13% year to date. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.